You watched CBRS explode 68% today. Your portfolio notifications are screaming. Your trading group chat is on fire. And right now, sitting there with your finger hovering over the buy button, you're about to make the same mistake that's destroyed more wealth than market crashes ever could. You think you're investing, but you're gambling with your future. Because here's what nobody's telling you about days like today. When CBRS rockets from 185 to 311 in a single session, when the euphoria is so thick you can taste it, when everyone around you is making money hand over fist, that's precisely when the most dangerous wealth-destroying decisions get made. Look at your screen right now. The S&P up 0.77%. NASDAQ climbing 0.88%. Even Bitcoin pushing past 81,000. Everything looks perfect. The market sentiment reads calm, but underneath that calm surface, FOMO is building like pressure in a fault line. And you feel it, don't you? That gnawing fear that you're missing out, that everyone else is getting rich while you're sitting on the sidelines, that this time really is different. That CBRS at $311 isn't expensive, it's just getting started. Your rational mind knows better, but your emotional mind is screaming buy, buy, buy. Because what if it goes to 400? What if it goes to 500? What if this is the opportunity that changes everything? But here's the brutal truth that Wall Street doesn't want you to understand. The moment you feel that irresistible urge to chase a 68% single-day gain, you've already lost the game. Because investing isn't about catching lightning in a bottle. It's about something far more powerful, far more reliable, and far more difficult to master. 2,000 years ago, a man sat in a military tent on the Germanic frontier, watching his empire convulse with war, plague, and political chaos. Markets rose and crashed. Fortunes were made and obliterated overnight. Speculation ran wild as traders bet on grain shortages and military contracts. His name was Marcus Aurelius, and while lesser men chased quick profits and easy money, he wrote words that would become the foundation of all lasting wealth. Very little is needed to make a happy life. It is all within yourself, in your way of thinking. Marcus understood something that modern investors have completely forgotten, that the greatest enemy of wealth isn't market crashes, or economic downturns, or even bad stock picks. It's the untrained mind that mistakes excitement for opportunity, emotion for analysis, and momentum for wisdom. When news arrived that grain prices had doubled in Alexandria, creating instant millionaires and paupers, Marcus didn't rush to capitalize. When reports came of silver discoveries that sent mining stocks soaring, he didn't chase the trend, because he understood a principle that separates the wealthy from the broke, the investor from the gambler, the wise from the foolish. The best revenge is not to be like your enemy. And today, your enemy isn't the market. It's everyone else in the market. The day traders celebrating their CBRS windfall. The momentum chasers piling into Poet at $20 after its 43% spike. The crypto believers convinced that Bitcoin at 81,000 is still cheap. Your enemy is the crowd. And the best revenge against the crowd isn't to beat them at their own game. It's to refuse to play their game entirely. Think about it. Right now, someone is buying CBRS at $311 because it went up 68%. Someone else is panic buying Poet at $20 because they missed the 43% move. A third person is mortgaging their house to buy more Bitcoin because everyone says it's going to 100,000. Are these investors, or are these addicts chasing their next high? This is where the Stoic investor separates himself from the masses, not through superior stock picking, or market timing, or technical analysis, but through the disciplined application of a single unshakable principle that Marcus Aurelius learned commanding legions on the battlefield. The principle of strategic indifference. Strategic indifference doesn't mean you don't care about returns. It means you're indifferent to the emotional theater that surrounds every market movement. When CBRS explodes 68%, you feel nothing. When it crashes 40% next week, you feel nothing. Because your decisions aren't based on what stocks do today, but on what businesses are worth over decades. Marcus Aurelius commanded 12 legions, but he never made a single decision based on the emotions of his soldiers. When they were euphoric after victory, he stayed measured. When they were terrified before battle, he stayed calm. Because he understood that good strategy requires emotional neutrality. Your portfolio is your legion. Every stock is a soldier under your command. And just like Marcus never promoted a soldier because the other troops were cheering, you never buy a stock because the market is celebrating. Here's how this works in practice. The Stoic investor has 3 non-negotiable rules that would have kept Marcus Aurelius wealthy in any market, in any century, under any conditions. Rule 1. Price is what you pay. Value is what you get. When CBRS trades at $311, the question isn't whether it might go higher tomorrow. The question is whether the business is worth $311 based on its cash flows, competitive position, and long-term prospects. If you can't answer that question without looking at the stock chart, you have no business owning the stock. Rule 2. Time arbitrage beats market timing. Everyone buying CBRS today is trying to make money this month, this quarter, this year. The Stoic investor is trying to make money this decade, next decade, the decade after that. When your timeline is 20 years and everyone else's timeline is 20 minutes, you have an almost unfair advantage. You can buy great businesses when they're hated and hold them until they're loved, but you can never, ever chase them when they're already flying. Rule 3. Preparation beats prediction. Marcus Aurelius didn't try to predict which battles he'd fight or which plagues would strike his empire. He prepared for all scenarios by building robust systems that could handle anything. Your investment system works the same way. You don't predict which stocks will soar 68%. You build a portfolio of exceptional businesses bought at reasonable prices that can compound wealth regardless of what the market does tomorrow. This is why Marcus Aurelius would ignore today's CBRS rally completely. Not because he doesn't understand opportunity, but because he understands the difference between opportunity and speculation. Real opportunity comes disguised as problems, challenges, and fear. It comes when great businesses are hated, when everyone is selling, when the future looks uncertain. Fake opportunity comes with fireworks and celebrations and 68% single-day gains. It comes when everyone is buying, when the future looks certain, when success seems guaranteed. The crowd always buys certainty and sells uncertainty. The Stoic investor does the opposite. So while everyone else is celebrating CBRS at $311, asking yourself the only question that matters: if this stock dropped 50% tomorrow, would you be terrified? Or would you be backing up the truck? If the answer is terrified, you have no business owning it at any price. This is the ancient path to modern wealth. Not through superior market calls or perfect timing or hot stock tips, but through the disciplined application of timeless principles have created lasting prosperity for 2,000 years. Marcus Aurelius built an empire that lasted centuries. You can build wealth that lasts generations, but only if you're willing to ignore the crowd, embrace the principles, and play a completely different game. The market will be here tomorrow. The opportunities will be here tomorrow. Your discipline is what determines whether you'll be here tomorrow, or whether you'll be another casualty of your own emotions. Choose wisely. Knowing the principle isn't enough. The next video shows exactly how to apply it.